Stock market has been going up. I look at my portfolio on January 20th, last Friday. My unrealized days gain was over 4,500. Today, January 23rd, my unrealized days gain was 4,800. That's crazy. Why has stock markets been going up? We're gonna look at the Netflix stock analysis. I got over $1,000 by selling Netflix put options. I'm gonna teach you how to make money by selling put options for beginners. S&P 500 went up 1.89% on January 20th. Nasdaq 2.66% all the way up, and Dow Jones 1% all the way up. And also on January 23rd, today, it was over 4,000 already. It was up over 1%. And it was going up, but it dropped a little bit, but it went back up again. And Nasdaq, it went up, but it dropped a little bit, so over 2%. It could have been more. And Dow Jones, it was up 0.76%. It went up, it dropped a little bit, it went back up again. Here, stock market setup. If you look at it, everything was green except for healthcare, just a few companies. Technology, look at technology. Amazon 3.81%, Tesla 4.92%, Apple, Google, Nvidia, everything was up. Like I said before, 2022 was horrible for technology stocks. 2023, I believe that technologies and consumer cyclical communication services, they will be the top stock market setups leading the S&P 500. And January 23rd, technology, everything was green. And some of the energy, healthcare, they were red. I don't believe energy is gonna be a leader. I don't believe healthcare is gonna be leader this year. Possibly, financial could be the number 2 or number 3. So I believe that number 1 could be technology, consumer, cyclical, and communication services. These 3 could be at the top, and possibly financial. If you look at 1 week, what was green? It was technology. What was red? Possibly healthcare, energy, industrial, consumer defensive. So everybody was rotating money into technology setup because it was down significantly in 2022. If you look at 1 month, it was technology, Amazon 14.47, Google 12.10, Apple 6.68, Meta, financial, Mazda, Visa, energy paused a little bit. Healthcare was the worst performer for 2023 at the beginning. I got over 1,200 by selling Netflix put options within 1 day. I'm going to talk about Netflix stock, and stock market has been going up because of the Netflix stock. It jumped significantly. So over 1,200, one contract, option contract, represents 100 shares. Netflix expiry date March 17, 2023. Strike price 335. Put options. If you are buying put options, you are bearish. But if you are selling put options, you are bullish. I'm bullish on Netflix stocks. That's why I sold Netflix put options. Today, January 23rd, I got over 1,200. So if you are buying put option, you don't want to buy too close to your expiry date. You don't like expiry date because time is your enemy. But if you are put option seller, time is your friend. So I want this put option to get it close to the expiry date as soon as possible. So I don't need to hold this until the expiry date. If Netflix stock goes up significantly in the next few days, I could always buy it back at a lower price. So you make money when you sell high and buy low by selling put options. But when you buy put options, you make money by buying low and selling high. So it's 2 different cases. Netflix stock jumped over 7% within the past 5 days. Why? If you look at it, Netflix stock jumped over 25% within 1 month. 6 months, it was up over 63%, and Netflix reported really great earnings. Netflix blows away expectations on subscriber numbers. Netflix added 7.66 million paid subscribers during the fourth quarter, so holiday season, more than 4.57 million Wall Street expected. In stock markets, if you beat expectations, your stock is most likely to jump. So that's why Netflix stock jumped significantly. They beat the expectation on subscriber. And of course, this was the first quarter. The Netflix ad tier is reflected in its earnings, and possibly it's because of holiday season, and as well as Netflix has really great shows recently, and the ad tier also helped. So you have like 3 catalysts helping Netflix stock. One is a ad tier, another one is a shows, another one is possibly the holiday season. So that was a great news. But EPS, they lost expectations. They only made 12 cents versus 45 cents per share, but the market didn't care because the subscriber number was really significantly, almost double. So it just blows away the expectations. So they don't care about EPS. And EPS was because of the euro denominated debt. So its margin of 7% stayed top Wall Street expectation. So the EPS miss, they don't really care. It wasn't so much, but the margin was stay better than Wall Street expectation. And during the company earnings call, remember, not only the result, the earnings outlook is important. Expectation, the guidance. What do they expect for the 2023? So company's earnings calls, Netflix said it has seen comparable engagement from its new tier members as it has seen with its regular customer. Additionally, it has not seen a significant number of people switching plan. That's really great news. So especially for investor. Investor look at it, we're gonna introduce a tier. What if the members who are paying $12, $18, what if they switch to a lower price to pay for the ad, to watch the ads? So that's their concern. Now they are saying, oh, you know what? We like our membership. We don't want to switch to pay lower and also watch ads. We don't want to watch ads, so they don't switch. So that's great news. So any new subscriber they get is additional customer because Netflix was so expensive. I couldn't afford it. I don't want to pay for it. But you know what? They got a new ad tier, $6.99, whatever the amount. I can pay for it. I don't mind watching ad, for a few minutes, whatever. And so I'm willing to pay for it. And also Netflix could potentially have a free subscription in future. Possibly not in this year, maybe next year as well. I'm going to tell you why Netflix is not a good stock that I'm intending to hold. It's a good stock to trade for this year because Netflix PE is now 35.91, so it's getting more expensive. So when you are paying for a stock, the valuation has to be right. If you are paying $200 for $100 calculator, you're overpaying. So in stock is the same way. So you don't want to be overpaying for that because Netflix has a lot of good news. So a lot of people are investing in Netflix. So possibly this year Netflix could get overvalued. So just be aware of that. So and that's one reason why I don't want to hold Netflix. I'm trading Netflix with put options, call options, whatever. You can use that. It's a short-term trading. So I don't intend to hold for more than 1 year for stocks. I don't have any Netflix stock right now. So that's good news, and they don't switch their subscriber. They do not switch to cheaper ad-supported model, and they are over 30 billion in revenue, almost 32 billion in revenue, and they will not get into business like this if they did not believe that it could be bigger than at least 10% of our revenue. So they are projecting that their annual tier could be at least 10% of their total revenue. That's great news. That's great news. And also, Netflix will no longer give subscriber guidance, but it will still report those numbers in future earning reports for that. Because I believe it's really hard to give guidance, because once you give guidance, when the expectation is too high, you came in low, it's gonna impact the stock as well, and possibly it's really hard to give guidance to a subscriber. And the company predicts revenue growth in the first quarter 2023 will rise 4%, higher than 3.7% Wall Street is currently projecting. But remember, 4% is nothing when we talk about growth stock. So Netflix may not necessarily be a growth stock anymore, and that's another reason that I don't want to buy Netflix stock and hold it for a long time. Netflix says this growth will be driven by more paid memberships and more money per paid membership. That's great news. That's really good news to trade Netflix stocks. And another reason, very important reason why I'm not holding Netflix stock is because of reinvestment. They create really good content, but these contents cost a lot of money, billions of dollars. So the business may not be so sustainable. Given all the competition that we have, Apple, Disney, Amazon Prime, so many streaming services. So that's the reason why I don't buy Netflix, and I don't want to hold Netflix stock, but I want to trade Netflix stock because the volatility is so high, so which is really good for trading options. I'm going to teach you how to set put options for beginners. How to set put options for beginners. Go to your stock trading account or option trading account. Look for the stock that you want to trade options on. In this example, I put in Netflix. Then go to the right, trade Netflix options. Click on it. Then I chose March expiry date, March 17, and I want to sell options. So basically click sell, then click put options. I want to choose the strike price of the money. So for put options of the money mean the price below the current share price. So in this example, I'm going to choose 335. Sell put options expire on March 17, 335, 9.65. So if I sell this option, I'm going to get $965. One option represents 100 shares. So you can click on 9.65 or you can click on plus sign, click on it. On right side you will see expected profit and loss. Your maximum expected profit is 965, the premium that you receive by selling put options. How about your maximum potential loss? It's 32,535. How do we get this number? By selling put options at 335 strike price, you are agreed to buy 100 shares of Netflix stock at $335 per share. Let's say Netflix company becomes bankrupt after you buy 100 shares at $335 per share. You pay $33,500, but the premium you receive is $965. So the difference between the two is your maximum potential loss, which is 32,535. So that's how you get this number. Before you sell put options, remember this: only do this for the fundamentally good companies that you want to buy. If you don't want to buy this stock at this price, don't do it. Make sure you have enough cash to cover one of the shares that you agree to buy. The buyer of the put options can exercise at any time. So if the stock price drop below $335, he can exercise anytime to make you buy one of the shares at $335. So make sure you have enough cash to cover this at any time. Do not sell put options naked. What does it mean? You do not have enough cash. Let's say you only have 30,000. You only have 33,000, and you sell the put options. the buyer exercise the put options that you need to buy 100 shares at $335. So if you don't have enough cash, then you need to borrow from the broker. Make sure you have enough cash to cover your positions. Click continue. If you want to sell one put options, enter one here. One option represents 100 shares. So basically you are agreeing to buy 100 shares at the strike price. Bid ask price. Ask is the minimum price that sellers are willing to sell. So let's say you want to sell this immediately, you can put in 9.65. It is the price that buyers are willing to pay maximum. Let's say you want to get a little bit more, and you can put in 9.8. Because you are selling at lower price than the other sellers, your order might get filled much sooner than the other sellers. But if you want to get it immediately, right away, you want to be really sure, you can put in just 9.65. For day is basically this is only for today. Go and take cancel. The one below that, it means that you want to wait until you get this order filled. I don't usually use go take cancel when I buy or sell options, and I usually use go for day because the next day you might forget about it, and the stock price can go up or can go down. That's gonna affect the option price significantly. So minimum credit is gonna be 965 because you are selling at 9.65. So when you order, you need to have at least 335,000 collateral. So if you don't have enough collateral, your broker might ask you to deposit more funds. So if you like it, you just click submit. So what happens if you don't have enough buying power, if you don't have enough deposit in your broker account? Not enough buying power, you don't have enough buying power in your brokerage account to place this order. So your broker is not gonna let you place this order if you don't have enough buying power. So it really depends on your relationship with your broker. Some of the brokers need you to put cash first. Some of the brokers give you some margin, but at least you still need to deposit some money to cover this trade. So make sure you have enough buying power and to cover this trade. Because I told you to have enough cash to cover your position, you don't have to worry about it. You just need to deposit 33,500 in your stock account before you selling this put options. If you are just starting, you don't have any stock trading account or option trading account, I'm gonna give you the links down below.
Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now.
If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist: stock investing, stock trading, option trading, real estate, cryptocurrency.